Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street and of course to decode for you the biggest announcements that are coming in from Reliance Industries 48th Annual General Meeting. All of it will be covered over the next 30 minutes, so stay tuned for that. Let's start off by looking at the markets. Remember, it's the first day of the September FNO series. We're looking at a subdued day so far. It's been a range-bound day of trade. 24,500 has also been breached on the lower end, 24,462. So you can actually look at a lot of choppiness that has gone through the course of the day. How are the sectors moving? Barring FMCG, consumer durables, pharma and some private sector bank moves that we are seeing, rest of the sectors have all slipped. This is despite the fact that India VIX has also slipped below the 12-odd mark, down by 3.7%. Broader markets are weak, banks are weak, IT, autos, oil and gas, real estate also struggling in trade right now. But the biggest news is coming from the largest listed stock market name that we have, and that's Reliance Industries, the conglomerate. The stock is also in focus right now. It went up by about 1.5% during the statements that were being made and is now seeing some cuts as well, 1.5% lower at 1363 as of now. The biggest headline that has come in from Reliance Industries 48th Annual General Meeting is that Reliance Jio IPO is now coming in soon. Chairman and Managing Director Mukesh Ambani has announced that the first half of 2026 will see Reliance Jio listing, and that will create a big value unlocking for the shareholders as well. Let me now welcome our guest on board. We have with us Sunny Agrawal, who's joining in to share with us his views on the markets and also to decode for us what exactly can be expected after these big bang announcements have been made on Reliance Industries. He'll be joining in shortly. So let's quickly go across to finding out what have been some of the key highlights that you need to know as far as the RIL AGM is concerned. So one of the biggest headlines has come in by way of Reliance Jio. There has been a long anticipation and a wait that investors did, and finally the news of the IPO is now out. First half of 2026 is when Reliance Jio IPO is also planned. Of course, we're also given to understand that apart from this, Mukesh Ambani has talked about creating a new subsidiary as well. This new subsidiary will be with respect to the AI division, data intelligence division of Reliance Industries. It will be called Reliance Intelligence as well. So that's another one that is a key aspect that you must be definitely focused on too. Now, apart from this, some of the key highlights in terms of numbers that have been given by Reliance Industries Chairman and Managing Director and respective stakeholders is that they've recapped for us how has been the performance of the conglomerate in FY25. They've marked out the consolidated revenue has come in at 10.7 lakh crore rupees. EBITDA has come in at 1.8 lakh crore rupees. Net profit at 81,309 crores, whereas the contribution to the exchequer has been over 2.1 lakh crore rupees. The workforce of Reliance Industries conglomerate stands at 6.8 lakh and aims to grow this by 10 lakh as well. Now, Mukesh Ambani also did highlight that how he is hopeful that over the next 2 decades, he is very bullish on India and the growth path that India can achieve. He expects that over the next 2 decades, he expects India to grow at a 10% GDP growth rate as well, with the per capita income that could grow by 4 to 5 times from where it is currently. Those are the key statements that are coming in. Apart from that, Google and Meta have again been core of Reliance Industries AGM this time around. Mr. Mukesh Ambani has talked about JVs, joint ventures with tech giant Meta and also Google as well. So partnerships that are deepening with the tech giants of the world as well. Now, on Google and Reliance partnering, Mr. Mukesh Ambani did say that it's going to be helping Reliance's businesses transform using AI, from energy to retail to telecom to even financial services. And to support this AI adoption together with Google, they're establishing Jamnagar Cloud Region built for and dedicated to Reliance Industries. This will bring world-class AI and compute from Google Cloud, powered by clean energy from Reliance and connected by Jio's advanced network as well. Not just that, with even Meta, joint ventures have been announced. Reliance Industries Chairman and Managing Director Mr. Mukesh Ambani said that he is pleased to unveil a new India-focused AI joint venture with their close partner Meta. Together, they want to pair the power of open source AI with Reliance's deep domain knowledge across industries, and that's why they're forming a dedicated joint venture with Meta to combine open models and tools with execution in energy, retail, telecom, media and manufacturing to deliver sovereign enterprise-ready AI for India. So these are some of the key highlights that have come in from the Reliance Industries AGM thus far. Sunny Agarwal is now joining in to share with us his views on the markets. He's the head of fundamental desk at SBI Securities. Warm welcome to you and thank you so much for taking the time out, Sunny. First up, your key takeaways from the big bang announcements made by Reliance Industries Chairman and Managing Director Mr. Mukesh Ambani at the 48th AGM.
Good afternoon and thanks for having me on the show. I think the biggest takeaway which it was waiting was for the clarity on IPO of Jio, and that has came that first half of FY26 is a time when calendar year 26 is a time where we will see an IPO of Jio. So I think that's one of the key takeaway. Anyway, I think Reliance continue to be leader as far as the AI or new energy business is concerned. So again, the management has stressed on the same point. Retail business, they continue to grow at one of the fastest clip in the industry. So again, that is on track. So I think overall, in line with expected announcement, especially on Jio IPO, which is scheduled maybe 6 months down the line. So that can be a big value unlocking trigger for a Reliance shareholder. Anyway, we believe that the fair value basis SOTP of Reliance is close to 1650 rupees is if somebody has got an investment horizon of 12 months. So keeping that price target in mind, we continue to remain constructive on Reliance post this AGM.
Sunny, so what will be your first strategy on Reliance Industries amidst all these announcements that are coming in? And first of all, can you decode for us how would you look at the stock price reaction today? We were looking at Reliance first rallying in trade in the initial part of the announcements that were being made. The stock was up 1.5% at the day's high, but it's now reeling under some pressure, 1.8% down, despite this long-awaited news that's been coming in of Jio IPO. How do you decipher the move on Reliance Industries today?
I think again, we believe that the announcement of IPO was something which it was keenly awaiting. And due to this global uncertain environment, maybe management would have decided that once the thing stabilizes over the period of next 2-3 months, then calendar year 26 is the right time to launch an IPO. Because one has to keep in mind that this IPO of Reliance Jio can be one of the largest in terms of issue size, so close to 40-50,000 crore worth of a dilution or the issue size can be there. Keeping in mind the recent SEBI regulation pertaining to IPO, at least 10% or 5% you need to dilute. So I think that will be a pretty large size, and for such a large size IPO to sell through, the sentiment on the street has to be bullish, or at least there has to be no global uncertainty, because most of the large investors globally would like to come and invest in such a large issue. So I think again in line with expected announcement on IPO front, other businesses anyway Reliance was doing well, and as alluded during the past earning press releases, the Reliance continue to dominate the retail segment, where they are one of the fastest growing player in terms of store expansion and at the same time retail sales. So they continue to lead the retail bandwagon. On the other hand, on Jio side, telecom business, we have recently heard that they have crossed 50 crore subscriber base. Again, a duopoly market. The recent changes in the tariff packages, where we have seen a base package being discontinued, and that led to indirect price hike or ARPU hike for players like Reliance. That again augurs well for telecom business. Oil and gas, gas and oil to chemical business can remain subdued for 1 or 2 quarters because of this global uncertainty which is going on and subdued prices of crude oil, and at the same time ongoing discussion pertaining to the import of oil from Russia, cheaper oil from Russia. So I think that business can be a drag in a short term. But in a longer term horizon, we believe that since the capex cycle for the telecom business is almost over, and at the same time the new energy business which will start contributing significantly to 1.5 year, 2 year down the line, that should start adding value and free cash flow to the Reliance, and that can help deleverage the balance sheet. So again, we continue to remain constructive on Reliance with a fair value of close to 1600, 1650 rupees and investment horizon of 12 to 15 months.
Okay, fair point. So that's the overall outlook on Reliance Industries. In fact, there are some other, news points that also you must keep in mind with respect to retail expansion that's also coming into focus as well. They're also talking about the newer launch pipeline within Geo as well on the media business, as well as when we talk about creation of this new subsidiary, Reliance Intelligence mission to drive AI in India. The 4 missions that it is going to be catering to is build AI-ready data centers, global arrangement with tech giants, open source. 4 missions is what they have: AI services for education, health, agri, SMEs, partnership with Google for Gemini AI, Jamnagar Cloud Region, AI smartphones and XR devices. Those are some of those announcements that have also come in. Now, as far as Reliance Retail is concerned, Isha Ambani Piramal has laid out the growth targets for retail. She's talked about how the target is 20% plus CAGR in revenues for the next 3 years. She's also detailed, how the company has already registered revenue of 11,500 crores in the first year, and the target is to expand presence in 25 countries in 12 months. So global expansion is definitely on the focus radar of Reliance Retail. The ambition is of 1 lakh crore rupees of a revenue in the next 5 years, and to be India's top FMCG company as well. So those are some of the aspirations that have been highlighted, some of the internal targets that have been highlighted by Isha Ambani there. So far, Sunny, how do you see Reliance Retail? It's still on an initial stage, nascent stage, to be able to contribute greatly to the overall conglomerate. But with the first ever company to be now looking at a wide presence across the globe with expansions of its retail footprint, looking at becoming India's #1 FMCG company. How are you looking at all of these aspects?
And a big commendable achievement by Reliance in terms of expanding the retail business. And one has to keep in mind when we say retail business for Reliance, it is not only pure play retail departmental store. So they hold a lot of brands under their portfolio, and across the product categories they are holding brands. So once you consolidate the value unlocking potential across both the pure play retail as well as the brand portfolio, so the scope is humongous over there. And as you rightly pointed out, it's not only about India. For them, the landscape is global, where
Yes.
they have recently acquired brands like Hamley also, which is a global, which gives them global exposure also.
Absolutely. So that is, the key statements that are coming in. Of course, the AGM is still on, and we are still hearing a lot of statements that are still coming in and pouring in. And of course, all of you viewers who still want to look at what is being spoken, is there's another parallel live that's going on our YouTube, so you could be looking at that as well. Now, there are 8 pillars also that Reliance Industries has, detailed for its retail business growth going forward. So I think the focus is a lot about empowering India's 42 lakh merchants, kiranas, traders, as well as, how to create the omni channels like physical retail, maximizing customer delight. These are some of the statements that are already being talked about as well. A lot of acquisitions have also taken place over the last couple of months and years within Reliance Retail. So that's going to be a clear focus as to how do they drive the growth going forward from here. So I think, Sunny, the big point of discussion over the next few months will be as to at what valuation does Reliance Jio come in, and with Reliance Jio's entry into the listed market, now we will have at least 2 big players competing against each other in the telecom basket. Bharti Airtel, which is so far a leader and has always jumped on the benefit of changing dynamics in the telecom story, but now it will also be Jio that will be competing in the same realm. How would you advise investors who've been big on Bharti Airtel so far, who've had Bharti Airtel as a core portfolio stock, now to look at this newer opportunity that will come in about 6 months from now?
I think again, what I would suggest is that those who have invested in Bharti should continue to remain invested, because time and again we have seen that the deadline for Jio IPO has been shifting, and again this time we are hopeful that maybe during the first half of calendar year 26, the IPO will see the light and investor will able to participate in that IPO. Till that time, I think the opportunity to participate in the telecom business is through Bharti Airtel and Bharti Hexacom, where they have got a presence in Rajasthan and eastern state of India. So I think one should remain invested, because the delta in terms of ARPU improvement, which is likely to play out over the period of next 2 quarters, that can be encashed through Bharti till the time Jio is listed. And once the Jio is up for an IPO, at that time we can do a comparison and check at what valuation Jio is coming with an IPO, and which company is more attractive in terms of investment. So would recommend to remain invested in Bharti at current juncture.
Okay. Okay, fair point. Let's now move forward from Reliance Industries and decode some of the other key opportunities that investors can scout for in the current market scenario. Today, the markets are still tad weak, 24,410 on day one of the new series that we are seeing. The previous series was already, in a negative territory. What's your expectation for this new series? It's the festive season that will be in focus for this series, and of course some of the big bank announcements that could come in from GST Council meeting in the first week of September itself. That's likely to drive the sentiments across the consumption space. So how are you looking at this new series pan out?
Again, Sakshi, what I feel is that the number of triggers which are available for an market participants are very few over the period of next 30-40 days. So as you rightly pointed out, GST rationalization is the one positive trigger which it is awaiting. But again, one has to keep in mind that that has been partially discounted also, and at the same time there can be some impact on demand in short term, because everyone is waiting for actual GST to get rationalized, and then once the product prices are at a lower end, then consumer will start buying those products. So September month can be a kind of muted month in terms of demand environment, but I am hopeful that the same will get recouped in the month of October ahead of Diwali. So overall, we continue to remain bullish on consumption as a space, and within that, especially auto, which are linked to two-wheeler and passenger vehicle segment. So companies like Hero MotoCorp, which is trading at a reasonable valuation, one of the largest portfolio in less than 25cc, 125cc motorbike segment, and auto ends names like SGS Enterprises, Lumax Auto, which is a proxy play on two-wheeler as well as passenger vehicle play. Farm equipment segment is the one which we believe can benefit significantly from the GST rate cut. So that can be played through Mahindra and Mahindra. And at the same time, one company where we believe farm mechanization can be at play is VST Tillers and Tractor Limited. So that's the one segment. And consumer, as we all know, that consumption basket consumer staple will also be one of the key beneficiary ahead of festive season, and given the robust monsoon which we are seeing currently.
So if you could help us with a list of stock ideas that you may have drawn for your clients as well amidst this new changing order, lower GST rates that could help the entire consumption theme, FMCG, consumer durables, maybe textiles, footwear, and even autos to that extent, cement to that extent. There are so many sectors that could probably see the benefits of lower taxes. So how are you drawing a list of all those stocks that could now come onto the radar afresh?
I think new age businesses is one of the direct indirect beneficiary of this GST cut rationalization. So we believe that can be played either through Eternal or Swiggy. We continue to remain constructive on both these names. At the same time, we believe that on the logistic front, delivery has reported very good set of numbers since last 2 quarters, and we are hopeful that because of this ramp up in e-commerce sales. So on e-commerce, indirect logistic play, the delivery, that's the one stock which we are recommending to our clients. On consumer staple front, Pidilite is the one stock which we believe has underperformed significantly during the last 3 years. So despite of 20% PAT CAGR during the last 3 years, we have seen stock hovering close to 2,900, 3,000 levels. I believe once the GST rationalization is there, there is a probability of a big push towards the construction link activity. So Pidilite is a proxy play on that. So Pidilite is the one stock we are recommending. Among the personal or beauty products, Honasa Consumer is the one stock which we believe has delivered a very good profitability during the June quarter. And going forward, as management has alluded that the EBITDA margins are likely to expand by 100 basis points every year for next 3-4 years. So Honasa Consumer is the one stock which can benefit out of that. And hence we are recommending Honasa Consumer. Auto we have already discussed. So Auto ANS is the place to be in. Auto Lumax Auto, SGS Enterprises, Gabriel India. These are the three stocks among the auto pack. Among the cement pack, we are recommending a mid-sized name like JK Cement, JK Lakshmi, Star Cement. And among the travel and tourism, again, which is a theme which can benefit out of the GST rationalization. So there we are recommending Chalet Hotel, Indian Hotel, and Indigo, which is an Interglobe Aviation.
Okay, fair point. I hope this has also helped a lot of our viewers to really draw a list of all those stocks that you could be focused on. 321, right time to also look at any BTST, STBT trades that you could point out for our viewers, Sunny. Only FMCG, consumer durables are the sectors that remain in the green. Rest all of them have slipped. Top names on the Nifty are ITC, Shriram Finance, BEL, Trent. Within the F&O space, you have Sanman Capital, CG Power, RBL Bank as some sectors, stocks that are hovering higher. But Reliance has now slipped to the low point of the day, 2.3% lower. M&M, Infosys, Apollo, Adani Enterprises are the other top laggards as far as the Nifty is concerned. What would be your top choice in terms of BTST, STBT trades?
So although Sakshi, I am not very expert on giving BTST trade, but one one stock which we have recommended to our client today is Bharat Electronic Limited, where we feel that post correction now the stock is looking attractive in terms of valuation, sitting on a very robust order book. So if somebody is looking for a kind of positional bet with an expectation of 15% return over the period of next 3 to 4 months, so Bharat Electronic is a place to be in. So one can buy this stock with a price target of 425 and keeping an investment horizon of 3 to 6 months. So BEL post correction is looking attractive to us.
Okay, fair point. I hope this has also helped you out overall in terms of how to look at the entire space. One more key aspect that we need to draw your attention, Sunny, is is that the rupee fell to an all-time low today and slipped past the 88 level to the dollar mark for the first time ever. Largely a lot of experts are pointing out to the impact on the exports due to tariffs as the key reason why the rupee has been facing such pressures. Even the RBI, we are given to understand from the early reports that they intervened and sold certain dollars, which led to certain recovery on the rupee from 88.2 odd levels to below 88 levels, around 87.9 odd levels. How would you look at this scenario of the fresh pressures on the rupee emerging because of the tariff-led impact on exports?
Yeah, definitely. I think the continuous outflow of foreign institutional investor is putting pressure on rupee, I believe, and to some extent, obviously, exporter importer also trying to cover their bet, so that can have some impact on rupee movement. So yes, I think it's a sign of worry that rupee is trading at an life low. But I believe that in a global uncertain environment where our exports are under pressure, that will at least help India to remain competitive along for trade along with another trading partner. Let's see. I'm hopeful that RBI will intervene and we will see a quick recovery in rupee going ahead. But again, obviously, in short term, positive for sectors like IT and pharma, where we see a majority of the revenue they earn is in dollar terms.
Okay, fair point. We'll also have to look at the impact of the tariffs at some stage then. Help us understand, we've been slapped with a 50% tariff, although the good part is that the markets have not had a washout, but slowly and gradually, the markets are consolidating around the levels which we are seeing as of now. Although we've tested 24,500 yet again now, and 24,400 is coming in. Um, how much longer will we continue to face these pressures? Is the worst behind? Have the markets digested the 50% tariff as of now? Or do you think there will be continued impact on the market, the current levels that we see from here on as well?
Yeah, so coming to key benchmark indices, we believe that it will continue to hover in the band of 1,200 point till the time this uncertainty related to tariff goes away. So maybe on lower end, 24,000 is a next big support in case we breach 24,300. And on upside, 25,300, 25,250 is a very strong resistance. And we have been seeing that market is trading in this narrow band since last 7 to 8 weeks, and we believe that will continue to happen because one has to keep in mind that the heavyweight like banking stocks are not performing at the current juncture, and the reason being that September quarter is likely to be again a tepid quarter for banks, and NBFCs looking at a pressure on NIM, and again being a heavyweight sector contributing more than 30-35% to the Nifty, that is not helping the Nifty to move up. IT sector, despite we have seen some short covering over there, still not adding full force for recovery in Nifty. So we believe ultimately investors need to identify stocks which are likely to do well over the period of next 3 to 6 months. And as of now, as the screen is also telling us, consumption is a place to be in. So again, stock specific activity is something which will keep on happening. Portfolio rotation is something which is a trend which we can see. So money is moving out of a capex driven stories to a consumption based stories, where we have seen a kind of underperformance during the last 12 to 18 months.
Absolutely. Towards the end, Sunny, help us understand what should be the market strategy for the next week to follow, which will be the most important week to look at because of the GST Council meeting that will begin on 3rd of September, continue until 4th of September. That's likely to put the final stampings on all those news, that we've been reporting on our channel, all those, source-based information on which are the stocks and the sectors and the companies that could feel, the kind of benefit of the GST rate reduction. Where could the pinch be be felt as well because of the expensive nature of the kind of rates that is likely to be seen. So all of that will be important to be seen as well. Sunny, if you could help us understand market strategy for the next week. What would you do on the Nifty Bank, and the key sectors that will be on top focus for the next week too?
Again, what I believe that next week we will start seeing an auto sales number, so auto sector can remain under focus. So anyway, because of the GST rationalization, auto sector is under will continue to hog the limelight, and within that, I discussed earlier few stocks like Mahindra and Mahindra, Hero Motocorp, or Lumax Auto, SGS Enterprise. So auto pack will continue to remain under focus. Consumption, again, consumer staple companies will continue to remain under focus because there we have seen a kind of a massive underperformance during the last 2 3 years. So consumption ahead of festive season, we should continue to outperform the broader market. And in addition to that, what we believe is that this is a time to start accumulating few quality NBFCs name, which can be one of the key beneficiary in case there is a revival in demand. So few companies, a few NBFCs which are focusing on auto financing, whether it is Shriram Finance, Cholamandalam, should be accumulated gradually from a long-term perspective.
Okay, fair point. I hope this has also given an overall understanding to all our viewers then how to prep for the next week. Then, Sunny, thank you so much for speaking to us and sparing all the time, helping us navigate through these fresh market moves as well. We'll start to wrap up the day's trade now. A minute to go before we end the day, viewers. 24,425, 73 points of a cut. FMCG is the top mover among the sectors. Consumer durables follow. Media, private banks are other sectors where you're looking at some gains, but look at India Wix. It's dropped by 3.6%. Real estate is down by 1.5%. Oil and gas, autos, IT, and even the broader market still feel some pinch at this point in time. ITC from the FMCG pack is the top mover, up by over 2.2%, now at a 409 odd level. Shriram Finance, BEL, which Sunny also pointed out, is a bullish call from Sunny as well to his clients today. L&T is another one that is also on the move on the positive side. Asian Paints, Kotak Mahindra Bank, Trent, these are the other top movers as far as markets are concerned. On the lower edition, you see M&M, Reliance Industries, Infosys, Apollo Hospitals, Adani as all the stocks that are dragging by 1 to 2.5, 3 odd percent in trade. In terms of the top movers on the F&O pack, Sanman Capital, CG Power, RBL Bank, these are the top movers, upwards of 3.5 to 5.5%. Sanman Capital, as the first time F&O stock, is seeing a stock move about 5.5% higher. But on the downside, you have RVNL that's dragged quite a bit today in the F&O action, 8.7% lower. Nykaa is down, BSC continues to reel under pressure, and SBI Cards is also seeing some trouble as well. 24,434, the closing level on the Nifty right now. 66 points of a cut coming in on the Nifty at the closing edition as well. Now, when we look at this entire week has also been, a week full of all those struggles in the markets, and we have actually seen the Nifty Bank drop by about 2.5% this week. We've also seen the Nifty also drop by 1.7% this week as well. So those are the two indices. So we end the week on a lower note, both on the Nifty and the Nifty Bank front. The Nifty Bank has underperformed the Nifty as well. Look at the broader markets. They've also seen even further pressure. Mid caps have ended the week 3.2% lower in trade. Small caps have ended 3.8% lower in trade as far as this weekly move is concerned. So the small caps are definitely the most underperforming index among the major ones that we have seen. For these top losers, as far as the Nifty losers for the week are concerned, M&M, Shriram Finance, Sun Pharma, Reliance Industries, Adani Enterprises are the top losers of this week so far. You're also looking at HDFC Bank, Geo Financials that have also dragged the indices thus far this week. So that's as far as the closing action is concerned. Viewers, do stay tuned with us onto Business Today Television as even beyond the market hours. Coverage continues. Remember, macroeconomic data will be in focus and GDP figures will be coming in. So you need to track that one. How has India's economy grown in Q1 of FY26? All of that will be decoded on the channel as well. So stay tuned for all of that coverage coming up. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Call.